What's up traders, welcome back to SMC Trading. In this video I'll show you how I caught this clean US30 sell setup that delivered over 100 pips. As you can see, I entered two trades and I'll be breaking that down in this video. The market gave me a textbook ICT entry, and once price started moving there was no looking back. Stay until the end because I'm going to show you my exact trade entries, targets, and why this worked out. Okay guys, if you're new here, my name is SMC Trading FX. This is my YouTube channel where we'll be focusing on ICT trading concepts, market structure, SMT, and high probability setup. Remember, one shot, one kill, guys. Once you enter, you just let the market play and do its thing, and then you'll see where it ends up. It's either you win or lose, but we mostly take wins here, guys. So without further ado, let's break down this trade. Before taking this trade, there were some factors that I was looking at and hoping that they would influence the market into my direction, and guess what they did. As you can see, the market was, I would say, consolidating at this point. It was just consolidating. Price was being held at the range from 8:30 until 9:30, and then at 9:30 the CME opened, delivered price higher, and then it swept this buy side liquidity. It swept these buy stops, trapping breakout traders into thinking this is a buy, buying them, and then it reversed. Whilst this was happening, we were waiting. We were waiting for price to show us its hand that it's going to deliver down. See, we could have taken that order block trade, but that's more advanced trading. I would like to wait for confirmations first before I take a trade. My first entry came in at what's this level? It's 52. Let me be sure. Let me go to settings. My first entry came around 52.206 level because of this fair value gap. As price swept these buy side liquidities over here, it rolled over and then gave us a low risk entry. Didn't take that one, and then we waited for this break in market structure here, and then we caught this fair value gap sell right after this candle closed and this one opened, so we caught that sell. And look at the time. Time is more important than price. Starts time and then price after. So I took the entry at the 9:45 to 10:15 micro. So that's the time that the market usually moves, and then price delivered to the downside, and then it created this 5-minute fair value gap, and then I took a re-entry there because my target was this low. And after I took that 5-minute fair value gap entry, I just let price move, and then once it hovered above my take profit, I just closed trades, because price almost usually doesn't give you a take profit hit straight. It likes to bounce around, so couldn't wait for price to hit my take profit, so I took my profits a bit early. As you can see, price right now is currently trading. It went beyond our point, but that's none of our concern. We made our money. We traded the setup we waited for. So that was the trade for today. I would like to give a lesson from this trade, the most important lesson from this trade, if not lessons. And there are three important lessons from these setups. Number one is patience. I waited for the market to show its hand before committing, meaning I waited for what? For the buy side raid, and then I waited for the break in market structure. Didn't predict, I waited and then reacted, but still predicting the future. So I took this fair value gap sell, and then I took another fair value gap sell here. And then the second one is risk management. Look at my stops. My stops are invalidation levels for my trades, meaning I am not expecting price to go above this high. I am not expecting price to go above this high, because if it was to do that, my setup has been invalidated. The market will likely just continue going upwards. Every trade must have a clear invalidation point. Number three, once the setup meets your rules, execute confidently and avoid emotional decisions. Once you see or feel that you are taking a trade based on emotional influence, I would advise that the trade must not be taken, because if you lose the trade, revenge trading usually follows. If you win the trade, overconfidence follows, meaning over trading and over leveraging. So I'm gonna open my trading view analysis so that you can see. No, not YouTube. Let me go to trading platform. I'm gonna open my F11. There we go. There we go. I'm also using CRT as a confluence with my trading. There we go. I believe in TradingView it views a little bit better compared to JForex, because I'm using JForex for the seconds time frame. So there we go. That order block sell was a model 1 entry. Took the fair value gap entry. That was good enough for me. And then took another fair value gap entry. Also good enough for me. So with that being said, I would like to thank you for watching this video, and I would like to wish you good luck and good trading. I'll see you in the next video.